Good afternoon, Fabio Donetti for Winston Capital Advisors. And I'm doing the film because I realized that I did it this morning and somehow in the middle it was interrupted and it came on bad quality. So I'm just doing it again, bear with me. So a couple of things to cover today. We're going to do a little bit of holiday sales in Amazon, Jerome Powell in the Congress, a little bit of the numbers, tech corrections, markets at a record. We're going to talk about Alibaba, and then the three big topics are going to be Brexit, OPEP, Bitcoin, and the tax vote that happened at the end of the week, and obviously, like always, what is coming next week. So let's start with the holiday sales. You know, we come in on a very strong economic numbers. We just have the third quarter GDP at 3.3%. The market expected 3%, so better numbers. Very big records in consumer confidence, investor confidence. So definitely we came in very well. The first reading that we had early in the week was that online sales were up 17% year on year, and it looks like Amazon took a 50% market share in that market. Regular and traditional sales also seem very strong. And remember, for many retailers, the holiday season is 50% of their business. So on Monday, we had an all-time high for Amazon. Jeff Bezos became worth $100 billion, number one guy on the list of billionaires. And then firms like Goldman Sachs put a strong buy with a target of 1450. However, on Tuesday, we had a big correction on the market, especially in the tech sector, 3-4%. A lot of the names that we have in the Winston Capital portfolio suffer quite. But however, the market did a record because it was a big rotation, a lot into the financials, in order to small and medium cap on the reading this, that they will be the biggest winners on the tax reform. We're going to talk about that at the end. But however, the market did a 24,000 on the Dow, all-time highs, discounting, rightfully so, at the end, that we're going to have a new and sweeping tax reform in the United States. But before, I'm going to leave that for the end. Then we have Jerome Powell. He went up to the Capitol Hill on first hearing about his confirmation as a chair of the Federal Reserve. No surprises. The guy's already a governor, very liked by the market, continuing on the Janet Yellen policy of slow but steady normalizations of interest rates, and then the reduction of the big portfolio for QE, and at the end also, but the change, I'm sorry, is a little bit of more deregulation into the financial sector, a better treatment of the banks post-crisis, which is something that President Trump promised, and it looks on delivery. On that, obviously, the financial sector kept on the rally. So that was the name that we like, Alibaba, on a benchmark transaction, $7 billion of financing, $46 billion of demand, 7 times oversubscribed. The benchmark, $1 billion, 40-year bond at 4.4% that eventually traded at 4.2. Great numbers over there. Some good news on Brexit for a change. Finally, we had agreed on the money. Like any divorce, once you agree on the money, everything becomes easier, visitation rights, etc. And it looks like England will pay $100 billion to the European Union for leaving the neighborhood. So that was good. The pound traded at 135, record recovery, and also the stock market did very well. OPEP, we had a good vote on Thursday, kind of expected, although at the end it was a little bit of a noise. Remember, OPEP had put quotas this year for the OPEP members plus Russia, which is not an OPEP member, to stabilize inventories and price. Very successful, coupled with a very good global economic growth. The oil market recovered, did very well, and on the news that we're going to ratify the quotas that we're going to expire on March of next year. Now they're going to be valid for the whole year. The Brent touched $64, so very good news on that front. Bitcoin, everywhere in the press, everybody was talking, and for anybody who owns it or thinks of owning it, I invite you to read a very good article on barons. I mean, I'm still struggling to understand it, but the bull case is, like I said, more and more the things get established. It's been there, it's been working. There are only 21 million coins eventually being created, so it will be out there. And people say, well, but there is other competitions. Gold has other competitors: silver, palladium, rhodium, diamonds. The good news on Bitcoin, I think, is one, is more and more established, and two, very important, it looks like soon, probably as soon as this month, some of the respectable exchanges in the United States will start trading futures on Bitcoin. If that's the case, it will allow a lot of traders to get hedged, to protect themselves, and it will be a tradable instrument. At the end, if you think about it, again, the bull case, Bitcoin is no different than gold, something that doesn't have an intrinsic value. It's all about supply and demand, but given that it's a limited quantity and somehow can be transmitted from people to people, could be worthwhile. Again, we don't have any Winston Capital. We're not there. Usually if I don't understand it, I don't get involved, and I still don't get understanding. But at least I'm looking into very different takes and very positive takes. Good piece on Barron's for that side. We talk about that, and then the last thing, I think the big thing, obviously, is the tax bill. Late on Friday, we had approved by the Senate the tax bill, the first sweeping change since 1986. And given the complex majorities, it's something that it will stay for a long time. The big thing is the corporate tax, 34% to 20%. There's details missing, but clearly winners are the corporations in America. I think that we had a big rally on the week. I think we will start. I guess we have a 3-5% more into the markets, given that this tax relief. Also, we're talking about a tax holiday. If you bring the money next year, the tax rate is 14%. So a lot of companies that have stashes of dollars abroad will bring it back. And according to many, many analysts, most of the money will be used for repurchases. So in a way, it will just keep feeding on the market. So very positive on that side. And we'll have more. We put a trade last week in Winston Capital. If you have SPY, sell that, some of that by IWM, the Russell 2000 or the financial index. That in a way will give you a better ride for your dollars, if on this tax reform trade. Also, on the personal side, there are less changes. The most meaningful changes is the elimination of the deductions for state and city taxes. I say the most meaningful because they're going to be very impactful to places like New York, San Francisco, LA, where you have heavy taxation rate on that. And as you know, for years, you were able to deduct all these taxes from your federal tax. Now it will be eliminated. People in Texas and Florida and Wisconsin that never had state taxes, less so city taxes, and very low real estate taxes, never had that benefit. It was for the big cities. Now it's being eliminated. Funny enough, if you look at the vote, it went along, the blue states are the big losers on that, the East Coast, the West Coast. The red states in the center are the big winners on that tax deal. So that's all I have. I hope you have a great week. I mean, we're getting into now the holiday slowly. Less news. The only important news is on Friday. We have the employment report. Expected 191,000 new jobs created, 4.1% on the unemployment rate. The rest, it should be quiet, hopefully. So again, remember, you can find us on winston.capital. Our daily emails, and again on our weekly webcasts. Have a good day. Have a good week.